One thing for sure is I'm very glad that I don't have your job. With the level of volatility in the market at the moment, the mixed data points giving very mixed signals on what ultimately is happening out there. And perhaps that's where we can start this discussion, is where you believe the market is going and where the economy is going.
Well, we're quite cautious on the market at these levels. So we've been surprised by the strength in the market in July. Effectively, the market now is almost flat year to date, but we had quite a severe pullback in the second quarter with quite a lot of negative news coming out of Europe. But that seems to sort of have gone away in the near term. And there's been some reasonably good results out of the US, so you see the market rallying on the back of that.
Particularly today, we had Wells Fargo and JP Morgan, I mentioned just a moment ago, both beating expectations, and the market appears to have found some traction. However, just a moment ago, a reversal. The Dow now is in negative territory again.
Yeah, we've seen a lot of sort of volatility month on month and sort of intraday, so it is quite fairly testing. But I guess if you take a longer term view, you can look through some of this volatility. And like I said, the market still looks pretty pricey to us.
A big move on the top 40 today, Mondi being at the top of the top 40, gaining 6%. And even with the current volatility, when one of your big caps moves to that extent, surely there has to be some news flow behind it.
There was a report out of Asia yesterday talking about stronger demand for a lot of the paper that both SAPI and Mondi produce. And I think that was sort of one of the reasons why we still saw quite a lot of strength in some of the paper names, added to obviously the general update that we had with the overall market up around 2.5.
Woolworths out with a trading update today saying that it expects full year headline earnings to rise by up to 55%. Is this in line with what you were expecting?
Actually looked stronger than we were expecting. Sales were in line, but that HEPS guidance that you just mentioned was a touch stronger, so it does look like gross margins improved in the second half, and they also alluded to a slightly lower tax rate, so we'll have to wait and see exactly how low that tax rate was, but definitely looked like the second half gross margin may have been a bit stronger than we were anticipating.
And a production update out of BHP Billiton, which closed up 2.5% at 220 Rand today. The company saying that they have achieved record annual production in petroleum and iron ore in both those divisions, but they are relatively cautious over the global economy in the shorter term. Again, the stock rallying on the back of that news.
Yeah, it was a fourth quarter production number, so most people looking at the sort of year-on-year averages, I wouldn't expect too much sort of changes to estimates, company reports end of August, but we sort of share their view on the cautious outlook in sort of the developed markets and China, but generally quite a positive result out of BHP.
ArcelorMittal, Kumba Iron Ore, we still have no word on whether they are going to reach resolution on the iron ore price. Both companies have said that they are committed to reaching an agreement. ArcelorMittal today up 2.75%. That's after the big rally we saw in the stock yesterday. Where do you think this one is going to go, and do you believe that we're going to see some commitment to achieving agreement?
I think we will only get an interim solution if in fact the government wants to push that through. The actual final solution is likely ultimately to have to go either to arbitration or to the court, and that could take, looks like now, an extended period of months, if not a year or two. And obviously, just given the importance of Arcelor to the steel industry locally, the government has obviously had to try to step in to try and get an interim solution so that Arcelor can maintain full production. The last thing we need in South Africa is unnecessary job losses and factory closures.
We saw ArcelorMittal obviously coming back hard in February when Kumba Iron Ore announced that they were no longer going to supply iron ore to ArcelorMittal at a discount to the ruling iron ore price. But do you think that there's an opportunity here? Perhaps some of the upside is already gone, but that ArcelorMittal could recover to the highs we saw before the announcement from Kumba Iron Ore?
Look, a lot does depend on the ultimate resolution. Recall when the news first broke at about 110 Rand-ish, which is where Arcelor was, the 70 Rand level was seen as a level where most of the sort of bad news was priced in, and we've seen the stock not necessarily breach that. So it bounces quite nicely off that 70 Rand level. Longer term, we think there is value in Arcelor at around the 70 Rand level. There's a lot less priced into Arcelor than, for example, sort of Kia, where sort of iron ore prices are at record highs again.
What is the key event risk for you this week? Would it be Ben Bernanke, the US Fed chairman, testifying before the Senate today on the health of the US economy and on monetary policy, potentially something that we hear out of his verbiage? Or is it the European bank stress tests that are due to be published on Friday?
Generally, I don't think they would be publishing the stress tests if there was very bad news. So in our view, they would only publish what they want the market to see. So I don't necessarily think that it would surprise us if that was a major market turning point. In terms of Bernanke's testimony a bit later today, again, I'd be surprised if he said anything that wasn't contained in the minutes of the latest FOMC meeting, which was released a couple of days ago. So the biggest risk is what we probably haven't thought about just yet.
Looking at the local front, we've got an interest rate decision tomorrow. Is that key to your investment strategy, or does a 50 basis point move or a non-move mean nothing to you in the scheme of your investment strategy, which, as you've pointed out repeatedly, is long-term and you try to avoid the short-term noise? Would an interest rate decision be tantamount to short-term noise, in your opinion?
It does have a fundamental impact, particularly on your banks and your retailers. So it is important, although probably not as important to us as to, let's say, a sort of a fixed income house where that would have major implications for their asset allocation decision.
As you said a minute ago, Johny, you have been concerned about the strength of the market over July. Well, not necessarily concerned, but it has surprised you to the upside. Having said that, are there any opportunities in the big caps at the moment that are glaringly obvious to you?
There's not that much value lying around. Some of the non-bank financials, I would argue, have some value. Sort of Old Mutual springs to mind as a stock that sort of has gone nowhere year to date after a very strong rally last year. If they can get their house in order with respect to selling their US business, there's probably quite a lot of upside in that stock. And then there are sort of some industrial stocks, particularly on the healthcare side, which in our view still have some value.
Can I push you harder on those some industrial stocks on the healthcare side, or wouldn't that be fair this afternoon?
No, it would be fair. We still think Pick n Pay has some value out of the retailers. The retailers have rallied very hard, particularly your clothing retailers. We talked about Woolies a bit earlier, but we think those have run out of steam. So we would be looking at, let's say, a Pick n Pay. On your healthcare side, you've got Life Healthcare, which recently came to market. They were pushed downwards on the listing price, you may recall. So they came to the market at a more attractive level than they initially planned to. So there's probably a bit of value there as well.
Just looking at the rumor that continues to circulate around Nedbank, and the latest one we saw was that HSBC. In fact, we know that HSBC had appointed an advisor to investigate a bid for Nedbank. If that did come to fruition, what price do you believe would be a fair price for Nedbank? Do you have any thoughts on it, or have you not really investigated the story?
We've looked at that. We were quite large holders in Old Mutual, and they obviously are one of the key decision makers in this transaction. So they would, we've tried to look at what would be the potential unlock in Old Mutual. Old Mutual trades at about a 30-35% discount to its sum of the parts. So the market not paying full value for Nedbank within Old Mutual at the moment. Our key concern though remains the regulators and whether they would want to see Nedbank fall into sort of foreign hands. So our investment case on Old Mutual is not premised on the sale of Nedbank.